Does a shrinking population inevitably lead to a weaker economy and lower living standards? For decades, this has been a prevailing fear in policy circles. Welcome to Demography in Context, Beyond the Data, the podcast dedicated to rigorous analysis of population trends and their real-world impacts. I'm Roberto, and today we're tackling a deeply ingrained assumption. Our discussion is based on a comprehensive global study by Bradshaw and Shana McDermott, published in No Evidence, Aging or Declining Populations Compromise Socioeconomic Performance of Countries. They directly challenge the common narrative that fewer people mean poorer outcomes, aiming to empirically test whether slower population growth or aging demographics truly correlate with declining economic or social indicators. Building on our previous discussion about Bradshaw and McDermott's work, their comprehensive global study, spanning 9 key socioeconomic indices, revealed truly striking results. These indices ranged from national wealth and income equality to human capital and even patent applications. What they found, crucially, was no evidence linking slower population growth or aging demographics to worse economic or social outcomes. In fact, their data showed that countries with low or even negative population growth frequently performed better across these indicators. A clear pattern emerged, indicating that nations with relatively older populations, often demonstrating a higher dependency ratio, actually reported higher per capita wealth. Furthermore, these older, more mature economies also tended to exhibit higher productivity and greater income equality. This really challenges the prevailing fear that demographic shifts inevitably lead to economic decline, revealing a much more complex reality. These striking findings carry significant implications for how we approach business strategy and public policy. Instead of fixating on population size, long-term prosperity clearly hinges on strategic investments in human capital, focusing on education, advanced skills, and technology. For businesses, this means prioritizing a highly skilled and adaptable workforce over merely a large one. For policymakers, it demands proactive reforms in areas like pension financing and healthcare, adapting systems to support an older, yet potentially more productive population. While the data are robust, it's crucial to acknowledge this isn't to say population decline is always desirable or without its own challenges. However, it strongly suggests that if capital per person and productivity remain robust, demographic shifts are certainly manageable. Factors like robust immigration policies are also crucial for filling labor demands in specific sectors. This underscores that effective governance and proactive adaptation are the true keystones for prosperity, far more so than simply targeting population numbers. So, what can we reasonably infer? The data suggest societies can thrive with aging or slower-growing populations by strategically investing in education, skills, and technology. This shifts focus from mere population counts to the quality of human capital and adaptive economic systems. Imagine plotting dependency ratio against per capita domestic wealth index. You'd see an upward curve, indicating higher wealth with older populations. This challenges fears about public services collapsing or a decline in innovation. The study shows higher productivity and patent applications in older nations, manageable with smart policy. Leaders should prioritize investment in lifelong learning, flexible retirement policies, and reform pension systems for sustainability. The core idea is to focus on maximizing the productivity of each individual rather than just population size. Bottom line, demographic change is not a threat to prosperity when societies are adaptable and invest wisely. We must continue asking critical questions as new data inform our evolving understanding of global